Hey, good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. And today is Friday. Woohoo! Hope you all have a wonderful upcoming weekend here. I'm kind of excited because I finally got my stuff moved in. I went through a whole moving process this week, and it's been driving me crazy. Still unpacking though, so that's my weekend, unpacking. So, anyways, let's begin here and talk about what's on the economic news releases scheduled for today. We got quite a bit of news today, so let's start. We'll begin here with the GDP. That's going to be the biggie for this week we've been kind of watching. You know what? They actually revised the first quarter, and this is what this 0.4% from 1.9%. So that is right now creating a lot of urgency or concern, obviously, in the market and stuff. Sorry about that. I don't know what that is. Concern on the market. So that basically they're saying this recession or this slowdown is a lot more than what it is than what they originally thought. So they go from 1.9 all the way to 0.4%. So for the second quarter GDP, they're estimating at 1.6, and they came up with 1.3 for actual numbers so far for second quarter. So we'll see where it comes to. Now, employment cost index. This is kind of the inflationary number for the employment side of things, where costs obviously for having the workers and everything. So they start off the last at 0.6%. They figured it'd go down a little bit, and it actually went up at 0.7%. So not too good. Obviously, it's costing employers a little bit more money to maintain employees. Hopefully we can get that down a little bit more, because obviously we don't want to see layoffs, and that's usually what will happen. Chicago PMI, that's the factory orders, manufacturing in the Chicago region. It was at 61.1% the previous month, and we were kind of expecting this slight uptick, and again downward. So not a good news, really good economic news releases scheduled so far. And finally, we got the consumer sentiment here. This is what everybody's surveys that's done by Michigan Sentiment from the Michigan University, what people are, how they're feeling about the economy. And it was at 63.8 the previous, and they thought it would be another uptick, and actually, a slight tick. Probably not so much different from the last month. So. With more of these newses and the debt ceiling crisis, we're going to go ahead and take a look at the news, but the debt ceiling crisis we're still waiting for, and as a result, stock market's kind of mixed because they really wanted to look at that GDP, but we're still kind of also waiting for, again, the debt ceiling crisis. This is still not being resolved. I don't know about you, I'm kind of irked that the government hasn't put aside any political differences and just get this thing done. Any cost savings that they think they're going to get could be easily moved to the cost of the yield spreads that they're going to have to pay for higher to be able to borrow the money. It's kind of like, again, I think I explained this before. If you're late on your credit card payment, what's the first thing that credit card companies are going to do to you? They're going to raise your interest. So now your cost to borrow that money is not going to be greater. Now think about this on billions of dollars, how much that could be, or trillions in this case, actually. In this case, trillions of dollars. That's at least $100 billion in just extra payments you're going to have to make just to pay the interest on borrowing that money. That's taxpayer money that you and I are paying for. So do me a favor, write your comments down below. I'd love to hear what you guys think of this, because personally on my side, I'm kind of a little irked about this. Let's take a look here at the bond market and see what the interest rate's going. We're actually got a huge rally here. The kind of pricing we haven't seen, as we saw, we haven't seen above the 101 mark here since early part of July here, since all this great debate about the debt ceiling. Everything started going down, 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 and it kind of stayed in this level range here. And we had this huge uptick up here. Now we got this opening gap here. I don't anticipate this staying for long. Usually when we have an opening gap like this, at some point it's going to get closed. But we had I think it was around 22, 25 basis points, just the uptick here, and then we're up another 25 basis points now. We were even up at 33 basis points at one point this morning, pulled back a little bit. So expect this to close at, maybe not today, but maybe next week, this to close at some point. So anyways, we'll kind of wrap it up, but interest rates to put it off to a better side. Interest rates are better today. You'll see much better on the interest rates today than pretty much probably the last couple of weeks. And then, so anyways, folks, we'll wrap it up. I hope you guys have a wonderful weekend. Again, if you guys are looking to buy a home or looking to refinance, check out my website at californiamortgagetips.com. Got further questions? Give me a ring. I'd love to be able to hear from you. And also, don't forget, put your comments about what your thoughts are on this debt ceiling crisis. I'd love to hear what you guys say, and I'll definitely mention in the next recording. Have a great day.